Hello everyone and welcome to today's No FOMO Charts Crypto and Stocks TA video. In this video, I go over swing trading charts and investing charts for analysis and education. Today is May 19th, 2024, just after 7 p.m. Eastern Standard Time on a Sunday. Let's get started with the crypto charts, TOTAL. Total has been in a uptrend since 2023. We are currently testing support levels above the 50 and 100 EMA, which is about 2.2 trillion and 2.1 trillion. There is a potential inverse head and shoulders pattern. We broke above the neckline. However, we have the Ethereum ETF decision coming up this week from the US SEC. So either the Ethereum ETF is going to be approved or denied the first round this week. That's why this setup is happening. In the bearish case, if there's a denial of the Ethereum ETF, we could have a pullback all the way down to 2.2 trillion, 2 trillion, or 1.95 trillion. In a bullish case, if the Ethereum ETF is approved for whatever reason, Coinbase estimates possibly a 30 to 40% chance of that happening this month, we could bounce up to rally to 2.4 trillion, 2.5, and all-time high of 2.7 trillion. So that's something to watch out for. As of right now, since we just started the week, the weekly charts look fine. The 4-hour is up crossed, so we'll see if we hold that support. Bitcoin USD is in a similar pattern. So we have the 2023 uptrend. We're basically in the all-time high price zone of Bitcoin, which is about 65,000 zone. Currently testing, it's almost the same exact setup. Currently testing with the potential inverse head and shoulders. Support level for Bitcoin is $63,000. If we lose that level, then we could probably see a dump to 60, down 57, 53,000. Same thing, the Ethereum spot ETF approval or denial will be the catalyst for this upcoming week, as well as some stocks and commodities. However, if we do have a bullish rally, 70,000 and 75,000 is the number to rally above. So just let's not get too excited, just in case this approval or denial causes some extreme volatility. So plus or minus approximately 10% for Bitcoin upcoming this month. On the weekly, there's no extreme sell signal or anything like that. 4-hour is up crossed. 1 hour is up crossed as well, just bouncing off oversold level at the time of this video. Let's go to Ethereum. Ethereum has a slanted inverse head and shoulders, but more importantly, we bounce off the support of 2,800 and we can start to see consolidation. It's tightening up the price and the EMAs. So if we pull up a Bollinger Band, not quite squeezing yet by definition, but something to watch out for. This could be a consolidation flag almost pattern. So if we rally into this pullback, almost like a psychological cup and handle type of idea or flag, if we hold above 2840, there is potential, especially with that Ethereum ETF approval or denial, if that happens. The bullish case, we could break out, retest, rally up to about 3,500 or 3,300. As well as if we reject, straight down to probably 27 is my estimate. The weekly bouncing off that 12 EMA. However, the 4-hour is in a death cross still, so Ethereum has a lot of work to do to get out of the short-term downtrend that it's in. Solana USDT also been in a strong rally for 1.5 years. Currently, we already had this potential upside down head and shoulders, and I wrote about this on my Twitter X social media account, about 9 stocks and cryptos total. So most of them actually went up. A few of them went down, but for the most part, that update to the watch list on my X was profitable. And there's a potential 22%. But again, this is tempered because of the upcoming Ethereum spot ETF. But this looks like a healthier setup. It's much more obvious to see the neckline support of 152. So bullish case, the target is 187. Bearish case, if we have a strong breakdown, probably 125. It's all pending that Ethereum approval or not. Cardano, slightly different story because we have a confirmed death cross on the 5200 EMA in the yellow and red. However, the good thing is we did hold above the support of 42 cents. This almost became a descending triangle in this move, but we had a bullish breakout. So at least we're surviving there. It's copying Bitcoin, obviously, but it should go in a bullish case 9% from the breakout, which we actually hit that. So second target would be 18%, which is above the 200 EMA. So we have to come back up to 50, 51 cents if we want to continue the rally. If not, we could pull back to about 42 cents or lower, 39 as well for bearish targets. Bullish targets to the upside, 50, 54 cents. Doge USDT, this pattern is showing up everywhere. So it's not that the market is extremely bullish, is that everything is copying Bitcoin and Ethereum right now. So that's why I don't have to really analyze every single altcoin as long as they're correlating with Bitcoin right now. So you can see the indecision by the market. There was a potential head and shoulders with this neckline. Then we have a shorter term upside down potential head and shoulders. So just put the two targets. Bearish is 12 cents, 14 cents, bearish target. Bullish target, 15 cents, 17 cents. The measure move of this inverse head and shoulders could be plus or minus 25 cents. So that's these two targets, 10 cents or 20, which is a long way to go. Last crypto is Link. I also wrote about this on my Twitter X because Link had some news coming out this past week, and then a much stronger, much more obvious upside down head and shoulders like Solana. So if this happens, something to watch out for in the 15% range is 1660. We hit that first target. If we're going to go another target, 30 cents, which would be $19. So there is a shooting star, a little bit of hesitation. So this could pull back and retest the $15 range. Bearish targets 12 or 12.90 as well. Let's switch over to stocks. S&P 500, we had some volatility from last week's inflation data, PPI, CPI, and as well as some of the employment data. So we managed to survive this rally. We broke above the all-time high, over the 2024 high of 525. That's all in the news. And the EMAs are in an upcross right now. So we're watching for the pivots to see if we rally to 536 or 550 on the upside. Even though this short-term EMA did upcross, we could see an actual small pullback because some of the oscillators like the RSI is a little bit overbought. So just a very small one, probably in the morning for the day traders. But the hourly looks like we have momentum forming. So there's going to be a little bit of volatility and see if we can continue rallying because we had a large MACD histogram momentum as well. The last time we saw this type of psychological consolidation above the 100 EMA was years ago, but we don't want this to turn into some kind of fake out. So we need to see strong continuation to the upside. Nasdaq's very similar chart, still in the uptrend for the past 1.5 years. There was a little bit of a shooting star last Thursday. If we look at the weekly chart, there's no signs of a bearish reversal. The 4 hours in the uptrend, the 1 hours in the uptrend as well, just a little bit overbought for the short term. As long as the support holds, there's quite a ways to go up, especially with the tech earnings coming out and the tech events this week. Dow Jones, everyone's talking about it, hit the 400 level on this chart on the DIA 400. On the DJI, hit 40,000, which is very good. Starting to approach the overbought level on the daily RSI, but again, we just bounced off of the 20 SMA on the weekly chart. No signs of a weekly bearish candle for a potential reversal there. Yes, there's a little bit of bearish divergence on the oscillators, but we're in this 4-hour uptrend, so the uptrend matters more. Hourly charts looks like we might get a bounce. Pretty quiet for today. And the immediate support to the downside is 397. Next targets to the upside, 405. They're in gray here on the right side, or 412. Russell 2000. Also, we're still holding on here in this golden up cross, bounced off the 200 EMA. So that's a strong setup. And if we're going to see continuation, we need to see IWM bounce up to about 213 level, next bullish target 218, or about 223 to the upside. Hopefully it does not pull back too hard to about the 200 range. And watch for that closely. Gold had a wonderful rally. And I remember maybe several streams ago, 1 or 2 streams ago, talking about this potential upside down head and shoulders. I marked it for gold and silver. And we had that nice continuation to the upside. The weekly chart, again, no signs of shooting star or anything like that. The week is starting fresh. We are in this higher high, higher low pattern. So maybe we'll see one more higher high before a higher low and let the EMAs follow. As well, starting to approach that overbought for both the 4-hour and the 1-hour. Could be some volatility there, but you can see on the daily, there's still that MACD histogram that remains to probably see some bullish continuation. SLV, remember, we had this golden up cross. We had this upside down head and shoulders almost 2 months ago. I probably talked about it in April. And then this potential upside down head and shoulders, if you just rewind the stream, I talked about this one here to watch out for that. And it came true. Starting to approach overbought levels. Now, when it's starting to bounce very high, the next levels are $29, $30, $31, and $33 for resistance levels. Just want to make sure that the EMAs hold. EMAs must hold. As soon as we get a 5-minute, 15, 1-hour bearish cascade, that's when this rally is going to be pretty much over. But for now, it's continuing to the upside. You can see it's starting to rally up. There's a large level of support for the downside after the rally fades. Copper as well. Remember talking about copper that it broke out of this large triangle plus an upside down head and shoulders setup and a golden cross. So there's three signs that this was going to break out before this turned into this symmetrical triangle and it was bouncing here and then it finally launched. So we have a gap up. Just watch out for this because it's now looking like for 2024 all-time highs on this copper ETF. Something to watch out for is if somebody's trying to play this, we want to buy the dips, not the resistance rejections to the downside. So the fact is, how far can it gap up? We're probably going to watch out for maybe a double top or maybe head and shoulders, maybe a V-shaped recovery, reversal to the downside, reversion to the mean. But it's starting to go parabolic here. Might see some FOMO plays from people trying to come in late. But remember, copper had the golden cross way back here in February 2024. US oil still consolidating a bit to the side. We do have this golden cross on US oil bouncing off the 200 EMA. So this could be a continuation setup in the larger triangle, which is going sideways, almost turning into a long-term potential ascending triangle. We do not want US oil to fall down back to the $69 level, but that could be a normal higher low support area. We rejected down in the past from 83. We are literally trying to hold the middle of the pattern right here above $73. So if we get the bounce and the breakout, we know we're getting uptrend continuation in the future. However, if it falls down to 69 or 72, that's not happening. The bullish setup for 78 and 81. UNG, natural gas ETF. I actually, full transparency on this one, I closed out my trade because we had that shooting star and then a gap up. So I closed the trade, made about, for me, let's see, about 15%. So this, I'm going to erase that now. And there's that easy setup. If it continues going up, it's okay to me because we had such volatile day trading last week. $22 is the target for this upside. It is starting to get into the overbought range, 4 hours golden cross. So it actually might blast off continuation from here. For me, though, I hit my profit target and I'm out. I'm just moved over some capital. But in terms of the rally, if it continues, that's not a surprise to me. We probably want, if you want to know for some kind of sell signal, you see some kind of double top or a fading down or trend reversal. We're still on the left side of that uptrend as of now as a daily swing trader. Let's talk about some of these meme stocks that happened this week. Gamestop. So I traded Gamestop, AMC, FFIE, and more ticker symbols. I'm just going to go over a few of these. But just to remind people, I am more of a swing trader investor, but when you have extreme volatility like this, I will day trade or I will scalp or day trade. So I did all three of those last week. Had a very nice profitable week. Just want to remind people, this is not random. What happens with these meme stocks is it gets extremely oversold, finds a level of support, and then we have the short squeeze, or there's like a catalyst. Sometimes it's earnings, or usually it's a support level. So we finally tapped this 0.88 Fibonacci retrace from the big first time GameStop rallied up. And then it's not random. We're hitting some of these targets to the upside. Now, because I was not making videos every single day, I just want to remind people, this is the danger of trading penny stocks or meme stocks. If somebody's too late to the play, it fades down, right? It's very important to be early to these plays. I remember somebody asked me right here, and I remember saying, if it gaps up or if it comes down, maybe buy some more. If it gaps up, then I have to put a 10% stop loss. Small amount of capital, let this thing go up at least 20%, and it actually went up 200%. So that just shows that sometimes swing trading works. You got to day trade this. But right now, the only setup that I'm looking at is maybe this will pull back all the way down to $17, the 200 EMA on a 4 hour, or about $16 range. So $17 to $16 range. If we happen to pull back more, that might cause a bounce like this play. Might do that. That happened before. If it falls completely down below the floor, I'm not going to touch that as a long. Just let it go and crash, because then it's over. Right? Weekly giant shooting star, so that doesn't really count in terms of extreme technical setup. It just shows extreme volatility. So the way I know we're going to reverse out of here is if we bounce up to about, if the bullish case 25, pull back to 20, and then try to retest that 618, about 33. It might happen. That's why it's not 100% over. Just need to watch that very carefully. AMC also, I traded this for 3 days before the crash. It was great. Again, how do we find these? So if GameStop is volatile, then most likely AMC, COS, BlackBerry, Reddit, etc., Coinbase, Robinhood, that's probably going to move a little bit. So just hopped onto this one and had really good profit on this for trading. So you can see when it happens, the meme stock explosion rally, it happens very quickly. This rally only lasted 2 days. So trying to buy and hold this was not the play for now. It might be if this holds above $4 for a significant period of time, then you can see we might have a mini Fibonacci retrace. Maybe it'll go back to 7 if we, in the bullish case. In the bearish case, it's going to crash down to $3. It's really up to the day traders and the large money institutions who are trying to short this thing down. Let's talk a little bit about MJ and then penny stocks, and we'll end. So MJ, people are still talking about this. The only thing that's good is we had the DEA rescheduling for marijuana cannabis here in America, which lowered the basically just kind of threat level of the substance is what I'm going to say. So made it a little bit less dangerous in the government's eyes, basically paraphrasing. We also had the President Biden announce that the DOJ, Department of Justice, is going to try to reschedule and lower that marijuana threat as well. So that's what is happening here. People are trying to hold on to the golden cross of the 50 and 200 EMA. Now, if we zoom out a little bit, this is MJ ETF, by the way, we're still in a potential ascending triangle at the bottom of this move. If we zoom out all the way, MJ ETF and stocks crashed so hard. So maybe this is the bottom, maybe. And as long as this stock can hold and potentially hold above 365, $4, and if we get a breakout above 5, this thing might start to really move, but it's probably catalyst based. Same thing with CGC. CGC was in a terrible downtrend. Almost, this is the definition of a death cross here. We finally had this bullish momentum reversal on the news, and it's actually holding the price above. We bounced above the 200 EMA. So just like GameStop, remember what happened is we held above the 200 EMA, and then there's a short squeeze. Maybe this might happen with MJ and CGC if the earnings is not absolutely terrible at the end of May 30. It might happen. A little explosion to the upside is actually possible. But if it pulls back down, $7 is that support level, $5, $3. We might even touch 2 if it goes all the way back down. But if we have another GameStop meme stock part number 2 this month or next month, it's actually showing. As long as it holds above 830, there's something there. Let's end with the last 2 penny stocks that I traded. FFIE, very profitable on this, but this is not financial advice, by the way. I am just showing some of the most volatile tickers from last week. It could be completely over by now because last Friday we had a horrific crash. I just got out of there. Negative 73% to the downside. That's why, as a trader, if somebody's too late, no FOMO and just don't trade. Don't even turn the system on. Don't turn the computer on. Just pass on it. Or paper trade if you really want to have action in trading view here. But FFIE actually got in on 12, 16, and 20 cents. That was the first or second day I got in. So like I had just amazing, greatest day trading of the entire year, FFIE. Can't even talk about it right now. It's so good. But the thing is the 1 hour starting to pull back. That was a huge sell-off on Friday. So something to really watch out for. If this is turning into a pullback, maybe it's going to test. It could bounce up again, but it could test the 57-cent level. I'm trying not to push this so hard because I don't want people to FOMO of this on this stock. It's okay to just let it pass. Opportunities. Some people said in the past, GameStop, AMC is never going to happen again. But 3 years later, 2 years later, it did happen again. So there will be another penny stock to trade in the future. If somebody is watching this and they miss this, it's okay. Learn from it, and then we move on to the next trade. Do not risk your capital. Or I want to tell fictitious trader as education to not risk their capital and lose negative 75% of their whole account in one day. That is not responsible. It's not good trading. That's just gambling. But if I'm having, let's say, day trading 2-to-1 plays and there's volatility of 100% every single morning, this was one of the greatest penny stocks of this year or this month at least, right? So it was phenomenal. But when it's over, you just let go and move on. So what I'm trying to show is for next time, if it's bearish, if we open up with a gap down at 57 cents, I am not touching this thing anymore. But if we have a strong rally back up to 150 or 215, maybe I'll play that just a little bit. This is more for the advanced traders. The last one here, CRKN, was an incredible play as well. And both of these, FFIE, CRKN, and G-Wave, GWAV, these were billion-dollar volume traded tickers this week. Everybody, if you're looking at your watch list, it was just everywhere on every scanner. So that's why I played it, right? Billion-dollar volume is rare volume. So that's why you could see even this on the second day, CRKN had 500%. But if you know penny stocks, if you know biotech, this is completely normal. But volatility, because it's only 20 cents. But when you have the breakdown, that's when you get out of here. So we have the rally, consolidation, and then a crash. On Friday, I did not even touch this. Negative 64, 60% to the downside. You just get out of there. It might be over. So downside target, 9 cents, 6 cents, 5 cents. The way we know it's going to bounce up, we've had a little bit of gap up, 17 cents to 22 cents. There's probably still a little bit of leftover volatility, but for an investment or for a swing trade, I am not probably going to touch this that much anymore after having good day trading profitability. Okay, let's end this video with the news. So again, we are coming into stock earnings, the end for stocks. Still May 19th video. But this week for stocks, we have releases from companies such as Lowe's, Target, Nvidia, etc. Those are the big ones. We also have Ralph Lauren and a couple other companies. But for me, because I like to trade retail and tech, because that's the leftover, everyone's staring at Nvidia. What are they going to announce, right? And with Microsoft as well, with the event this week. For economic data releases, Fed Chair Powell is going to testify before Congress for 2 days to clarify. They're going to ask him questions. FOMC member speeches, meeting minutes, and G7 meetings for 3 days straight. Existing home sales, new home sales, durable goods, core durable goods, consumer sentiment data. Just going to say last week's CPI and PPI, the producer index, price index was too high above expectations. CPI was in line with expectations. And the FOMC chairman did come out and announce at an event that basically is reassuring that inflation will come down over time. So people just kind of shrugged it off, the data. But we will see more coming out. The news to end this video. Yes, USA stock market earnings is ending soon. We're finalizing the last retail and tech other companies, the big names. It's all about AI this month. OpenAI ChatGPT 4.0 launched worldwide, and I tested it out recently. It improved, definitely improved. Apple is close to a potential partnership deal with OpenAI to use ChatGPT and integrate it with Siri and other mobile functions, machine learning as well. So that's going to improve the AI for Apple products, potentially. Google Gemini AI is beginning to launch for web searches and mobile devices. It's a limited release this month, but it's going to be interesting. Finally, Google Search is going to be powered by AI. Microsoft Build event this week. Everyone's watching to see if there's going to be more AI announcements. In regards to crypto trading and trading, this is interesting news from CNBC. Up to 25% of Robinhood's trading volume has come during non-traditional market hours on their busiest days. So that's both domestic and international. And there's even talks or thinking that maybe stock trading might go 24 hours a day. So it's just an idea. Personally, I don't want to see that because there's going to be a lot more action that stock traders are going to miss. That's why crypto can be harder because multiple time zones, like 3 time zones for trading. Stocks is a little easier because it's 1 time zone. But if it opens up to interactive broker hours or Robinhood hours overnight, that's going to significantly change things. So pre-market and post-market is still very important. Like I was showing you earlier in this video, the meme stock rally loses steam after a volatility week of day trading. We might get oversold bounce, but just want to caution and warn people to not FOMO in just because something went up a lot. There will be another play in the future if we are patient enough. The SEC Ethereum ETF approval or denials are supposed to begin on May 23rd, and Coinbase predicts a 30% to 40% chance of approval. So that's about 60 to 70% denial chance. Something to watch out for in the crypto space for volatility. Thank you so much for watching this video. If you like this video, if you learned something, go ahead and click subscribe, like, comment a request, and make sure you click subscribe for more content. I'll see you in the next video. Make sure to always remind yourself to, and myself, to manage risk, 2-to-1 reward to risk ratio, and no FOMO. If you're feeling a lot of emotions because of volatility and you don't have any open positions, it's okay to just walk away from the market for a day or two, just cool off. And that's okay as well. Happy trading. I'll see you next time.